I know you guys are tired of not having a simple model you can rinse and repeat every single day. So today I want to show you my champagne model and how I apply it to the everyday markets. Let's get into it. So I know you guys are tired of coming to the market every day and just trying to think of a scenario that's going to allow you to print money. Have no fear. The champagne model is here. So I've done other videos on the champagne model and how I execute my trades, but I just wanted to break down this trade because you can see that we're in a 4-hour market maker model, and a lot of people get fearful when they see the market just dumping like this, especially when you're trading the NASDAQ, which is a bullish instrument. So I should say this, if this is your first time watching my video, my name is Darren. I go by Champagne Trades. I'm a full-time day trader that's been trading since 2015. So a lot of people, when they see my content or I tell them what I do and I tell them I'm a full-time trader, they always ask me like, how's the market going? How are you doing in trading? Especially at times like this when the market is super bearish. I trade futures and I trade foreign exchange. So with the Forex market and the futures market, you can make money if price is going down. You don't have to make money if it's only going up. So I wanted to just put that out there so that people know you can have a strategy if price goes down. It doesn't always have to be longs. So for the Forex and the futures traders, let's get down to business. All right, so you can see on this 4-hour chart, we have a market maker sell model. This is obviously the buy side of the curve, and you can see that this is the sell side of the curve. So the first thing I'm looking at is I'm looking for higher time frame key levels, and I want to see how price reacts to them. When you see all these engineered lows here that's been untapped at the time, you've kind of figured that price is going to run down fast and smack them, right? These are all the stop losses of the buyers. Their stop loss is going to be underneath these swings. So I'm expecting things on the left side of the curve to get disrespected, and I'm looking for things on the right side of the curve to hold. So we can see that this is a bullish fair value gap right here. We can see how many times it has been respected here, here, and then once we close below it, that's a sign of disrespect. We also have the retest of it, and then you can see this wick rejection right here is also a sign of disrespect once it closes below. So that's when you want to look to short and then target more sell side liquidity. So this is the 4-hour inversion gap right there. Let's go down to the correlating time frame, the 15-minute, so we can see what happens session by session. All right, so now we're on the 15-minute chart, and we can see that price opened up at the 12 a.m. and made a short-term high right there, which was at the time the high of the day. And then London, it kind of accumulates. Then pre-market, it goes up for manipulation, and it runs out the high. It also forms a SMT with ES. So if you look on ES, you can see that high of the day right there after the 12 a.m. open. It never got ran. So that's a sign of bearish order flow. Again, we got this blue area, which is the 4-hour bullish fair value gap that didn't hold. And then we also have this bullish fair value gap that didn't hold, turned IFEG. So we can see the halfway point being retested once price closes below it right there. And you can see the 4-hour candle is bearish. So we have a power of 3 bearish on the daily and the 4-hour. We have a run on the high of the day. We have bearish SMT. We have an IFVG on the 4-hour, an IFVG on the 15-minute. So we're just looking for entries at macros at this point. So now we're on the 1-minute chart, and this is where the precision comes into play. All right, so again, the blue area is the bullish fair value gap that's getting disrespected. The red area is the 15-minute fair value gap that's getting disrespected. So now I'm just looking for confirmation that the order flow is still bearish on my entry time frame, and I'm looking to enter on a macro. So boom, we have this order block right here with this push up, and then price dips below it. A fair value gap right there. You see how price returns to it, gives you the wick, the trampoline effect, and you can just simply short there, put your stop loss over this swing high or over this swing high. For the safety first, and then I just simply look to target down here the -2 standard deviation, which also lined up with the 15-minute swing low. So once this entry happens, you can see the entry is at 9:46, just 4 minutes before the 9:50 macro. You just kind of wait to see if the order flow is still order flowing in your favor. Look at this fair value gap. This is what you want to see. You want to see fair value gaps being made, respected. Boom, and then it just drops to the -2 standard deviation, and then it continues to drop all the way to the -4 standard deviation. Now let's talk about the standard deviation and why I put it right there. You see this swing high right here? From this swing low to this swing high, that's the run up on the last bullish swing high before the meltdown. So that's why I put my standard deviation right there. And you can see that price just lined up perfectly. This was a good ass trade. I called it out to my group. If you guys do want a live trade with me and my group, make sure you click the link in the description. And yeah, hold on, let me do this for y'all real quick. You can see the executions right there. So my entry right off of the order block, precision. Second entry, once the fair value gap got respected, boom, partial, full position off there at the halfway point of the -2, -2.5 standard deviation. TP smack. This was a good champagne model. Look how bearish that candle is. So that lets me know that I was in line with the higher time frame order flow. Hopefully you guys were able to get some value from this video, and until the next one, out.